Have you ever wished that you can go back in time and basically take the information that you know now and apply it to your trading situation today? Well, I've definitely been in that position, and quite a bit I get asked, what would I do differently if I was a beginner? And in this video, we're going to talk about just that. Basically, some of the things that I learned along this journey. I started my investing journey actually back in 2010, 2011, and then I actually started trading. I didn't even realize it at the time that it was called trading, but around 2017 timeframe, and have just been building on my skills ever since. And this was actually a question that came from one of the members inside of the Profitable Traders Academy, where she asked this question. I'm going to share with you some of the things that I wish I knew sooner, and then also share with you some of the mistakes that I made, so that way you can avoid those mistakes. And if you have made those mistakes, it's going to help you be able to turn that thing around and move in the right direction. So the first thing is going to be start with one market. And when I first got into using technical analysis as one of the primary things inside of my trading, this was about 3 years ago. I started off with crypto, and at that time I was looking at maybe 20 different things inside of my watch list. And those 20 different things, I was thinking, well, if I look at more markets, then maybe that means more money. And that was actually the opposite of what actually happened. I actually lost more money because my focus was basically just all over the place, and I couldn't concentrate on the 1 or 2 markets that were actually going to bring in the gains. So what I do now is that I actually focus just on 1 to 2 key markets, and then I do have other markets that I look at, but they're not my main markets. So I pared down the number of things that I look at significantly, and that has helped my profitability so much more. The second thing I would do is to start with a simple strategy and just master it. So I've learned some things on my own, but then I would start off with a simple strategy and I would master that. I would stick with that for 1 year. And the reason why I say that is because when I first got off into this world of technical analysis, seeing all these different strategies on social media, it can be very overwhelming. So basically, as I was researching different strategies and different people that maybe I wanted to learn from, whoever had the simplest strategy that I understood from their videos or from their content, that was the person that I signed up with, and that was actually very beneficial. But it wasn't until maybe a couple years ago where I stuck with the strategy. I'm talking about at least a year, actually 8 months to a year, and stuck with that strategy and really understood inside and out what that strategy was all about. And then that's when I saw consistent profitability inside of my own trading. Stick with it for at least a year, because that's going to give you the most return on your time, and it's also going to give you the most return on your investment. So the third thing is something that I really didn't take into consideration when I first started trading, and that was risk management. And did I learn my lesson the hard way with not focusing on risk management ahead of time? So there are a lot of different risk management plans that can be followed, but one of the rules that I follow, and this depends on what I'm trading and a whole bunch of other factors, but basically I like to focus on one market, one session. Sometimes, now that I'm a swing trader, that's kind of out the door because the opportunity may not appear in the time that I want it to, but it really worked really well when it came to scalping. The other thing is strategy. So basically just taking the same elements from that last point and then carrying it through to my risk management. And then another thing that I've been doing is also minimizing or at least restricting the amount of money that I lose in a given trade. So basically giving my cap and knowing all of that before I actually enter the trade has definitely been really good, not just for a risk management standpoint, but also from a capital preservation standpoint, because the goal in all of this is to hold on to your money when you make it, but also releasing a little bit of it at a time, so that way you could potentially take that money and grow it as well. So, and sometimes I would base that on maybe 1% or 2% or sometimes up to 5% of the account's value, or maybe some other value, especially if I'm trading options. It's going to look a lot different depending on the type of trader you are. But when it comes to risk management, no matter what style or anything that you're using, you want to make sure that you have that mindset of how much money you want to lose before you enter the trade, because once you press that buy or sell button, pretty much all of the planning and everything that you did kind of goes out of the window. It goes out of your head, and you're just like looking at the trade because you want to be right. So whatever risk management strategy you want to use, make sure you put one in place, stick to it very firmly. So the fourth thing, along with that whole risk management thing, is also not chasing losses. So sometimes it's really tempting after you lose, wanting to hop back into the market and make your money back real quick. And in my experience, it just led to me losing more and more and more and more money inside of the market. So typically when I trade, I limit myself to maybe 1 or 2 trades per day. And that's basically it. I'm out of the market. And sometimes it was really frustrating to see that after I cut myself off, price eventually went into the direction I wanted to go in. But at the same time, I followed my rules that I set for myself and was able to keep that capital, because just how price went in the direction that I wanted it to go eventually, and it getting there eventually, it could have went the opposite way as well. So you just have to always look at both sides when you're trading. Yes, you may have gained on a trade, that's amazing, but it could have went the other way. Or if you lost a trade, then it could have went the opposite way as well. So just kind of keeping that perspective in mind has really helped me as well in order to be able to keep a lot more of my capital. Number 5, and this is actually my favorite, mainly because I really like learning from people who've done things that I want to do, and that is to invest in education early. And I believe that earlier in my journey, I could have avoided some losses, and then I also could have grown a lot more if I would have invested in mentors and people that I looked up to in the industry a lot sooner. It's really, really easy to stick to or want to stick to free content on YouTube. There's some amazing content on YouTube, but at the same time, it can be very overwhelming in trying to figure out, okay, what strategy should I use? Should I go with this person? Should I go with that person? Should I take this element? Should I take that element and put it into my trading? All of that can be very confusing. And once I started to work with mentors, I started to gain more momentum in my trading, at least this version of trading using technical analysis. And then also I started to see more profitability, more momentum. And then I actually built in more discipline because I had somebody there telling me, do this, do that, in terms of trying to get to the place where I want to be. So if there's someone like myself or somebody else that you admire inside of this trading industry, go ahead and check out the programs. Basically, stop being cheap. Some of you are being cheap, throwing thousands of dollars into the market and losing and like, I don't know what happened. You know what happened. You need to go get some help. Like, this is not the game where you BS yourself. This is a game where you are 100% straight up honest with yourself. And if you feel like you need to get some help, find somebody you like and go ahead and get help from them. But just don't expect for any program or any mentor to basically be the holy grail. That doesn't exist. It's really a journey. It's really you taking bits and pieces here and there from free and paid content, mentorship, all of that in order to put it together in order to get the help that you need and then also get the success that you're looking for as well. So that's something that I've done, not just inside of trading, but also in my personal and professional career. And it's worked out so well. So go ahead and do that. And number 6 is to document every single trade. So in the beginning, when I first started trading, I would take a trade and then exit and be like, oh yeah, that was profitable. But I wouldn't know by how much was it profitable. And then if I was thinking about the trades that I took, I'd be like, oh yeah, like I'm profitable in this particular market, but then I go back and look at the numbers and calculate everything. Turns out I wasn't. So then also inside of journaling, it not only showed me whether or not I was profitable with an actual dollar amount, but it also showed me what setups were the best setups for me or what market conditions were the best for me. And then it also showed me where my mistakes were, because the way that I journal now is a lot different from how I journaled in the beginning. And I do plan on making a video on this channel on journaling, so definitely stick around for that and be notified when that is dropped. So go ahead and like and subscribe to this channel. But anyway, the way that I journal now is definitely a lot more effective for me, and basically in helping me be able to minimize my mistakes. So one of the biggest ways that people can improve their trading is just to minimize their mistakes. Focus on those things. Don't try to focus on incorporating a whole bunch of things inside of your strategy. When I looked at my journaling from when I first started using technical analysis, my charts were all over the place and I had so much stuff on them. Versus looking at my charts now, they're so clean and I have really good notes that I take for myself because I know that I'm going to come back and look at these things. It's basically night and day, and journaling was one of those things that I used in order to help me see my progression inside of the market. I use a combination of screenshots. I also write notes in a journal, and I also do other things that I will share inside of the video in order for you to basically take some tips for yourself and implement them the way that you want to. So that way you can improve your own journaling and then ultimately lead to you being a better trader and being able to make better decisions inside of the market. And the seventh thing is going to be developing your emotional discipline inside of the markets early. And this kind of ties into some of the other points that we talked about as far as over trading, over leveraging, also revenge trading, and trying to get your money back from the markets. Having that emotional discipline inside of the market obviously is going to be huge because it's going to help you save a lot more money, and you'll actually be able to take that money and potentially grow it even further. So a couple of things that have helped me develop this emotional discipline, and I'm constantly working on this all the time. So it's not like you've made it to some grand level where you never have to practice this stuff again. You're always improving, always trying to find ways to control your emotions, not get FOMO, basically see the market going up and you're like, oh, I gotta jump into that trend. And then as soon as you get into it, the market falls. That has happened to me so many times. And then also not waiting for price to get to the level that you want price to get to, getting into early because you think that you're going to miss the move. And because of that, I have developed this discipline because I've had so much pain in the past with price doing that over and over again, and I wanted to reduce that as much as possible. So I stuck with my plans, and sometimes that meant missing a move because maybe price didn't enter or didn't get to the level that I thought that it would get to, and it stopped maybe just short of it, and then it took off, and I had to within myself be okay with that happening. And because of that, it turned me into a much more profitable trader for sure. And yes, it's frustrating, of course, but all of these things are helping me build character and fortitude and all of these things inside of the market. So one of those things specifically is stoicism. So a lot of people think that stoicism is more about not having emotions, and that's not realistic because we're human. We have emotions, we have things that we're dealing with. So the thing that I really love about stoicism is actually doing things that help me accept the things that I have no control over. So when I take a trade, the thing I do have control over is being able to do the analysis. So I do the analysis, I press the buy or sell button, and then from there, I just kind of monitor it because I have no control on how the market moves. It may move in my direction immediately, which obviously we all want that. That would be great. But other times it may do some sort of retracement and almost stop me out. And I can't do anything about that. Sometimes it will stop me out. Can't do anything about that. So just basically just having that level of acceptance before putting on the trade. And I do that over and over and over again. And of course, with anything that you practice over time, long periods of time, not talking about a week, 2 weeks, a month. No, it takes a long time. And then over time, it has helped me become the trader that I am today. And I know that things are going to be great in the future because I'm going to continue to adopt this practice inside of my life in order to help me not only with trading, but with other things that I find really interesting. Just to recap, some of the things that I would do differently if I was to do my trading career over again would be to focus on one market first. That's going to be the simplest because you're going to focus and you're going to know that market inside and out. One market first, and then second, start with a simple strategy and master it. So don't go hopping from strategy to strategy to strategy. Of course, with social media, it's really interesting to see somebody's video and see it as the holy grail of trading, but no such thing exists. Focus on one strategy and stick with that for a year. I say at least, because that is the thing that has helped me, and I'm still doing that right now to this day. And number 3 is respect risk management. So whatever your risk management rules that you set for yourself before you put on the trade, respect those, stick to those. It's going to save you a lot of money and a lot of heartache inside of the market. And then don't chase losses. So if you lose, then don't hop right back into the market. Give it a little bit of time. And depending on your risk tolerance, your rules and things that you set for yourself, maybe wait an hour or maybe wait until the next day. Just wait and you'll be better for it. Number 5 is to invest into quality education. It actually blows my mind how I could have saved myself so much time and so much effort if I would have done this earlier on. And then it also blows my mind how some people are willing to throw thousands of dollars inside of the market, but not willing to invest a few $100s or even $1,000 into themselves in order to learn how to do something the right way. Blows my mind. Do whatever you want. It's your money. However, these are things that I wish I would have done sooner, and I could have been much, much further. Number 6 is to document every single trade. You're only going to learn on how to get better if you document the trade. Document some things like what you saw in the market. Maybe take screenshots. At times, I've journaled how I felt about putting on the trade. So if I felt nervous about a trade, then that tells me something as well. So basically, whichever method you use to journal, just do it. That's going to help you. And then number 7 is to develop that emotional discipline very early inside of your trading. It's going to help you a lot to avoid FOMO, which is fear of missing out, and all these other things that we hear about inside of trading. So these are the things that I would do differently if I was starting my trading journey over. Thank you so much for watching this video, and I will see you next time.